Alright, I'm looking at a possible trade on AUD JPY currency pair on the hourly time frame. As I did in the previous video that I recorded and uploaded to my YouTube channel, I'm gonna do this one. I always start by plotting support and resistance on the monthly time frame, because as you all know from videos that I've posted in the past, as a student of Wise Trade, we believe that the monthly and the weekly time frames are the best time frames to plot support and resistance, because amongst other things, they hold the more weight. So because the support and the resistance time frames on the monthly and weekly hold the most weight, we always start by plotting support and resistance on them. Now, looking at AUD currency pair on the monthly chart, you see this yellow line right here. It has support right there where it's at, and if you go back 7 candles to the left, it has support right there too. If you continue to move across the screen, you will see that price hit this yellow line and went back down. If you keep going across, you will see that price hit this yellow line and went up. Keep going across, you will see price hit this yellow line and went down. Keep going across, you will see that price both hit that yellow line and went up and went down. That's how you know that it's a key level on the monthly, because you have both price rejecting it and going down, or price rejecting it and going up. So with it being at a key level, we will go down time frames. Let me also say that that gray line there is support and resistance. As you continue to go across the screen, you will see that price hit that gray line, then went down, hit that gray line, then went up, hit that gray line, then went down, hit that gray line, then went up, hit that gray line, and then went down. So with those yellow and so with that yellow and gray line being support and resistance on the monthly time frame, we would go down time frames to look for those same lines as support and resistance on those time frames too. So on the weekly, we see that price hit that yellow line and went up, hit that gray line and went up. Most recently, it hit that yellow line, and as you can see from that greenish candle, price is going up now. So we go down to the daily, we see the same thing. Price hit that yellow line and went up. Now with the gray line, which is resistance, price hit it and went down. Now back to the yellow line, price hit it and went up. Now we back to the green line. So what I'm expecting is for price to, since it did in the past, hit it and went down, is possibly go down again. So I'm gonna go to the 8-hour time frame, and I'm gonna see what kind of price action I get. As you can see, price is reacting to that gray line, which is resistance, because you have a bearish, that red candle forming there right now. If you go down the time frame, you see what I'm talking about. That bearish red candle at resistance. All right, let's go down to the 3-hour time frame. You still see that bearish red candle at resistance. To the 1 hour, you see that, well, it was a bearish candle at resistance. It's still a bearish candle at resistance on the 3-hour, the 4-hour, the 8-hour, the day. But as you go down in time frames, it breaks the candlesticks down into the time frame that you are on. So on the hour, every candle that you see represents an hour of action. So back to the 3-hour, this red bearish candle that's forming represents 3 hours of price action. So whatever is happening, or rather whatever happens in 3 hours, will just show as one candle. But when you go down to the 1 hour, whatever happens every hour, it shows as an hour candlestick. So that 3-hour candle is going to be breaking down into 3 hourly candles on the hour. However many 30 minutes you have in 3 hours is how many 30-minute candlesticks you will have on the 30-minute time frame. So on the 30-minute time frame, what I see is that monthly resistance level, which is the gray line. I also see that there's some kind of chart pattern forming here. You have a high right up here at the top. I'm gonna draw a line so you can see what I'm talking about. All right, right here to the highest candlestick that you see on this chart right here, where I have my line drawn at, that's a high. If you go over 1, 2, 3 candlesticks from that highest 30-minute candlestick you see on this chart, you will see a bearish, a reddish candlestick that lets you know that price has come down from the high of the highest 30-minute candlestick on this chart. And if you go over 1, 2, 3, 4 candlesticks from this bearish red candlestick, that's 1, 2, 3 candlesticks from the highest 30-minute candle stick on this chart, you will see a bullish small green candlestick. As far as a price pattern goes, I can't really tell you what it is because it's not completely formed, but I do know that with that line I have drawn here, it's a short-term downtrend. A short-term downtrend where you have lower highs and lower lows. Remember the highest candlestick on remember the highest candlestick on this 30-minute chart, that represents a high. When you come down to this bearish red candlestick that's near this gray line, which is resistance on the monthly, that's a low. When you go back up, to this line that I drew here, you will see that small bullish green 30-minute candlestick. That's a high. That's how I know that it is a short-term downtrend, because a downtrend is lower highs, lower lows. Now, with price dropping below this red bearish candlestick, that lets me know that price is still in a downtrend. Because if it was not still in a downtrend, price would have not gone lower than this bearish red 30-minute candlestick right here. So I'm gonna draw another trend line connecting these two lows, and as you can see, you have a high, you have a low, you have a lower high, and you have a lower low. All right, what I'm looking for is price to possibly come back up in this range. I'm gonna just draw a little line here so you see what I'm talking about. I'm looking for price to possibly come back up in this to this range, which would be a greenish bullish candlestick. And then if price closes, meaning a bearish reddish candlestick forms below and closes, I'm expecting price to go down. So that's what I'm looking at on AUD JPY currency pair on the 30-minute time frame.